I was blown away by the process and how it could be repeatable. And the only limit was me, and how hard I was willing to commit to this.
Welcome into the Get Invested podcast, a podcast about all things real estate and real estate investing, brought to you by Capital Velocity Investments and a part of the Matthias Talks Investing Substack.
Hello, everybody. Welcome into another episode of the Get Invested podcast. As always, we're your hosts, Jordan and Matthias, and we're excited to be here to talk all things investing, real estate, and real estate investing. And today, what we're going to talk about, I think it encompasses all three, Matthias.
I would agree.
Yeah, it can be applied to broad investing. It can be applied specifically to real estate investing, and not just our kind, any of the kinds, I suppose. This is an inclusive conversation here, guys. What we're going to talk about today is the life cycle of the investor. And we mean that as they become different phases of an investor. We're not going to, this isn't like
metamorphosis. Like
this isn't like 100 years to live. We're not going to go from childhood to death. We're just going to talk about pivotal moments as people become more and more sophisticated investors, I suppose. And the way we got to this because we were talking about how important the proof of concept moment is for early investors, because as you guys know, that's our focus. That's our mission. And although we welcome all investors, our particular aim is to get more and more people involved in this. So there's always going to be a moment, a leap of faith kind of moment. So we were talking about that, and then we decided we'd get into the whole ball of wax, as it were.
Yeah, it's good to talk about, because one thing unique to the real estate part of the real estate investing is that it's long term. You're not going to see a month of, like a stock where, if you hit it right before a big IPO or something like that, where like, went to the moon and, we picked it in time or whatever. That is not the real estate life. In order to have that proof of concept or the light bulb coming on moment, it takes time, sometimes year, 2 years, 3 years, it could be a while. And that plays really, really well into why we try to get people started as soon as we can with whatever they have in terms of cash to invest, because that proof of concept, the proof of concept is the important part, right? I'm not turning somebody into a millionaire with one investment. That's never going to happen unless they're already a millionaire. It doesn't make any sense.
But they're very, very close. Yeah.
Yeah, exactly. That's not what we're going for. What I want to do is I want them to understand the power of this type of investing and why I do it the way I do, why we do this. I want them to understand that. And that could take 3-5 years. It could take a long time to prove that concept to them. So it's much more important to get them just started on that process than it is to have them save up for a big chunk of money where we can go make a really serious return on that first investment, something that would impact their life. You know what I mean? It's much more important to prove the concept than it is to for them to save up a huge chunk of money.
Yeah, exactly. We call it a proof of concept because they see something that they can scale easily in their mind.
Mm-hmm. Yeah.
Now, I guess it's possible that there could be somebody out there who has been very good with money, but has not invested it, much more of a saver than an investor. And I guess there's those people who could throw a ton at it and see that return be huge in their proof of concept phase. But most of the people that we recruit are not in that situation. They're usually not also coming from like, I have only done this kind of investing, and now let me start this kind of investing. We don't normally have that either. And if we do, they're probably going to be a little bit more aware of all of it. So the typical person doesn't have all that cash to throw at it. And second, but most importantly, is it's an interesting moment, Matthias. And I've been thinking about it because I've been trying to do my own little capital raising these days. And it's a very interesting moment. I know you face it all the time, where you understand that they need to see it with their money in their bank account coming to them, right? You understand that, but you're also like, you just asked me what I do. And I'm like, I'm throwing everything I have into this. And then you're like, well, that's a funny moment, but it's an important pivotal one. They have to see for themselves.
Yeah. And that's a great point and something that we definitely want to talk about. We talk about our goal here is to impact people's lives by presenting them with an opportunity they probably didn't know exist and get them started a lot sooner than probably most other people like me are going to do it. But in order to change the life, it's going to take that life cycle. We're going to discuss the timeline, but that proof of concept has to happen in order for them to commit, because it takes commitment, which is what exactly what happened with me. We bought that first house. Somebody talked me into it. We bought that first house. And then a couple months later, we finished renovations. We started the refinance process. And then, maybe a year after we bought that first house, I'm sitting there going, oh, okay. And at that point, I'm going, all right, well, how in the world can I do this as many times as possible, as quickly as possible? You know what I mean? Like the proof of concept had happened, and then directed my stray attention, I guess, towards maximizing this strategy, this concept of the real estate investing, because once I recognized the power of it, I was like, okay, well, this is going to get every cent of mine for the next 12 years. And that's exactly what happened. Over the life cycle, I was able to do bigger and bigger chunks, different styles, different, we switched from houses to apartments and all those things. But the whole point is that once I understood the concept and I was like, okay, this can work and will work, now I have the motivation to focus and to go, okay, I'm going to forego buying a new car. I'm going to forego this, that, and the other thing in order to maximize this for now, because later on I'll have, life-changing money, which is exactly what happened, right? Like I don't live anything like I used to live, but it was all intentional back then because I was motivated by the proof of concept, if that makes sense.
I mean, you had your own moment, basically. Even though you were the one investing, it was your thing that you were leading. I
was on the fence. They had to talk me into it. Yeah.
I mean, besides the moment that, Jen showed you why, and then you guys made that leap, there was still, you had decided to do it. You were leading it, but at the same time, you still weren't, I guess, a true believer. You hadn't completely converted.
I was like, well, I'm going to give this the whole college try and do what people say you're supposed to do. And so I did that. And then, at some point, it was really the refinance when we bought that house for $65,000, put maybe 12, 15,000 into it. And then refinanced for 89,000, I think. It appraised for 120 or 116 or something like that. So basically it was double value from when we bought it almost. And they was able to pull more cash out than we had put into it. I was like, okay, well, this is pretty sweet in a non-taxable event, mind you. I was like, okay, well, now we're talking. And that refinance was the eye-opening moment.
So it's funny that you say accurately that this is not going to be a quick thing. It's going to take time.
Mm-hmm.
But then kind of the origin story is because of a number of circumstances, it was pretty quick the first time.
It was about a year when we got that money. I mean, it was longer than that because they gave us the smallest loan possible on that. We had to put less down than we wanted to put down.
Right.
Because they were like, we're not going to give you a loan less than $50,000 or whatever it was. And we were like, but we have like 30,000. We were so terrified of extra debt. That's how long ago this was and how we had no idea what we were doing. But they were like, look, we're not going to write a loan for, $28,000 on a house or something. They were like, this is ridiculous. And I was like, okay, but we immediately threw as much as we could onto it. And we eventually paid that loan off that first year. And then we had done those renovations as well. So then we rented it out and we're making cash flow on it, and we were like, hey, this is pretty sweet. And as that happened, I was learning more about it and say, hey, people refinance and they can go do this again. And we learned as we went, and then I was blown away by the process and how it could be repeatable. And the only limit was me, and how hard I was willing to commit to this.
Right. And I think that's an interesting shift when you see like the repeatable or the iterative. You're like, oh, we should do this again. Because until that point, you're kind of in the dabble phase, if you will. You're like,
exactly.
I had a great opportunity, foreclosure. We knew a person who told us about it. Couldn't pass this opportunity up, but it didn't mean you were going to like go full bore into this. That you could have just had this great opportunity, made the money, kept the house forever to rent, or sold it and then moved on to something else completely and put the money in something completely different.
Yeah. And I think that's one of the things about me personally is that I'm always thinking long term. Like I knew even when we did this house, I was like, this house is not going to change my life. Doesn't matter if it's the best investment ever. So I never considered going into it like that. I was just like, well, this will be another iron in the fire, another wealth building opportunity, And then as I learned more about it, I was going, wait, no, this should be the wealth building opportunity because I can't do any of this with the other methods of investing that I'm familiar with and that I know about. And as I grew older and explored more, it's still far and away in my opinion, the best way to build a long-term wealth. And that's what I discovered over time. And we moved from houses to apartments. And that was just a matter of scale, but the concepts were all the same. And that's why I feel like that realization changed, just like we keep saying. Once it clicked in my head, I go, okay, well, I was going to focus on building wealth, but now I have a niche that I know is the best way, or at least that the best way to this point in my life that I've learned about in order to build that wealth towards the goals that I had for my family and my life.
This seems like that might be the shift where you go from I'm trying to build wealth, and not to say that it's a vague idea, but that you have different things you're trying.
I'm doing a bunch of things that to help me build wealth.
Right. Exactly. I mean, everything from, buying your own house and building equity to investing in mutual funds, Roth IRA, stocks,
exactly,
house, everything that you could do. So you go from I am trying to build wealth to this is the method by which I'm going to build wealth. That seems like the major shift.
Exactly.
Where it becomes, a very clear, concrete, specific avenue and goal and method.
I think something else that it's worth mentioning is that, as I was like, okay, here's what I'm going to focus on, it became more predictable. Obviously, there's fluctuations in timelines, but I was like, whoa, it was a repeatable enough process. I know I can look at this. I'm not going to know when, but I know that I'm going to hit millionaire status. And it's going to be a matter of time. Once I understood that the process could be iterative and this could be a focus, I was like, holy cow. And that's a big realization, because that tells you that, the sky's the limit is kind of a lame term, but really is. It's like, hey, I get to choose the limit on how far we take this, because I could just keep doing this, right? I could still be in huge personal growth mode where, we lived in a 2-bedroom house and we put the boys in a bunk bed in our room or something like that. We could be living well below our means still if we wanted to, and our personal wealth would be growing exponentially still. But now we've adapted a much more comfortable lifestyle because we've hit certain levels that we wanted to hit, of generational wealth or whatever you want to call it. But like that realization hit me pretty hard that I get to choose how far I take this. You know what I mean? Like it's a repeatable process. So, me as, okay. Yes. Understood.
You guys are one in this conversation.
Yes. She is part of the I. We get to choose how far we take this. And obviously, I don't get to pick, we're going to do it in 5 years versus 7 years to 12 years or whatever. It's more like, hey, if I keep choosing to absolutely maximize this, it is going to go faster than if I slow down and do other things or whatever. And that was an important part of the process too. At any given time, we have investors that are in certain different, we'll call it phases of the investor life cycle. But there's been several that have come along and have hit different versions of the same levels of realization that Jen and I did in our journey, as it were.
Right. This is a little bit of an aside, but I do think it's also a nice way to frame the progression that we're going to talk about. I'm forgetting who it was. It's a well-known, very wealthy investor. And he's not the only one that I've seen, but it's come across my radar a number of times. Like this, I would say, I guess, more focused attempt to kind of yell this from the rooftops is the anti-diversification message, right? Got to be careful. I don't want to say anti-diversity. That's a very different thing.
Correct.
Where they're like, no, the way to build wealth is not to diversify, because that has been so long, kind of like you got to diversify to protect yourself. Sure. And that's how all of these long-term IRAs and retirement funds,
they hedge risk by diversification.
All kinds of ways. But the way to actually get wealthy,
the focus
to build real wealth, is to actually concentrate in specific either areas or even positions in a company. But that's a little bit different of a conversation, but it's the same.
There's quite a few successful investors who've said that. I mean, Warren Buffett is one of them, because he goes, invest in what you know, focus on what you know, and go from there. I mean, different because he owns a gazillion different businesses. I mean, he focuses on a certain style of investing. He's a known value investor, long-term value investor. So that's his niche per se. But there's a lot of successful investors who go, look, you preserve wealth with diversification, but it's going to take you a lot longer to build wealth, because all those almost side bets that you use to hedge risks, that's what you're index funds typically do. You're hedging against a bunch of potential pitfalls to avoid losing everything or a lot of it, let's say. But those same side bets, they're holding you back from achieving the higher return that you could, because you're almost accepting the loss of the side bets up until the time when you actually need the side bets, because they're going to hold you up whenever something bad happens, if that makes sense. The hedges, as it were.
Yeah, I mean, side bet, I know what you're saying there, but it does also seem like there is a way in which side bets actually make sense within, like, you have the concentration and you have these on the side, versus, to me, it's way more like you're just making a bunch of small bets.
Yes. That's a better way to describe it. Yeah, because you're spread out, like there's going to be 2 or 3 industry winners, right? They're going to shoot to the moon in terms. Let's say we're talking stocks basically right now.
Yeah,
there's 2 or 3 stocks that are going to shoot to the moon in an industry. The rest of them are going to be average. They're probably going to go up depending on how the industry does. But the fact that you're not making big bets in individual stocks means that when those 3 shoot up, yes, you do. In a way, you capture some of that rocket ship to the moon value, but you didn't make big bets. You made small bets in those, and your other small bets didn't do nearly as well. So, they're weighing down theoretically the entire return that you could have made had you made the entire bet on one of the companies.
Right. So bring that back to what we were going to talk about, more specifically the life cycle of the real estate investor. The idea of proving concept, knowing enough, understanding, being comfortable to concentrate and make quote unquote big bets in an area, in this instance, real estate, that you're going to put most of it in there. That is the shift from proof of concept to, actually, I don't know what you want to call this next phase. There's the proof of concept phase to,
well, so I'd call it the commit phase. Okay. There's a concept here, commit and focus, or focus. They're interchangeable. For instance, for me, I had a brokerage account. I was doing more than the matching amount for my Air Force version of the 401k, the TSP we've talked about before. I was doing above that. I was doing more investment of that. I had a Roth. I had a brokerage account, all these different things. But then once I hit the focus, I went, okay, well, I minimized my TSP to just the matching, because I'm going to do better investing this, even with the tax, advantages of doing deferred. Like, I'm still going to do far better by putting every cent that I can possibly find into this investing that I'm doing now, this real estate investing. So I didn't put any more into my brokerage account. I said, okay, well, I'm done with that right now. At the time, I was like, let's go, whatever this 15,000, 20,000, whatever it was that was in there that I built up over the years. I'm going to go ahead and dump this into. But basically, that's the next phase. Once I realized the proof of concept, I said, okay, how can I get everything I possibly can working on this niche focus?
So, you mentioned you wanted to talk about maybe kind of reference investors A, B, and C. And watching them, or watching is not the right word. You're not like sitting there like, looking at them all the time. But in your interaction and them being a part of it, like, what is that moment like? When does it typically happen? What's that conversation? Just be interested to know, kind of, there's got to be pretty cool conversations for you and for them, but for you, since it's the goal. Yeah.
I'd say that the most common moment for the proof of concept, the realization, it comes with the first, and it just makes sense. It comes with the first refinance. Like, say they invested X amount, and then a few years in, we set on our business plan, add a bunch of value, refinance, return most or a good chunk of the investor capital. They go, wait a minute. So you're telling me that, first of all, it's not taxable at all, a refinance, when you send me a big check. 2, the distribution checks, the cash flow checks that we've been getting are going to continue. My ownership percentage doesn't change in the whole property. There's a bunch more equity still there that we haven't even tapped into yet. So on the eventual sale, I'll get another big chunk, and I can take this, what you just sent me, completely tax-free. I can go and I can do this in the next one and start the process all over again. That's usually the moment where they go, which is honestly the same as it was for me. I have this asset that's working for me, making pretty strong returns, decent returns, but the finding out that I can multiply it, that's the key. The same with most of them. So not everybody has the same realization at that time. So let's say our first investment, when we returned, 75% of capital within a few years, not everybody that was invested in that immediately went, all right, I'm stopping everything. This is what I'm going to do from now on. Definitely not the case. Everybody had plenty of other things going on. But there were a couple that did. And they were like, all right, well, I've seen enough. We're moving. Here we go. And they did. And I can always tell in the conversation that I have with the people where the light bulb goes off and they go, this is what I want to work towards. They want to learn more, but it's almost a foregone conclusion that whenever I get a next one, any money that I've sent them back is coming, especially if they're IRA investors. It's just sitting there in their self-directed IRA waiting on the next opportunity. I really don't even ask them for the next time. I just tell them, hey, we've got another one. And they're like, perfect. I've got XYZ amount that you've been sending me from the previous ones or whatever. And when they start talking about investing cash outside of a retirement account, it's like, hey, we're saving up other cash. We'd like to start working on this. I know that their mind has been clicked over just like mine was. I got to get everything I possibly can working on this because I want to be able to enjoy the fruits of all this investing before I turn 55 and a half or whatever, 65, 62 and a half, whatever, depending on the type of accounts and all that stuff. So people start having that same mindset. Hey, we've got a nest egg for retirement. Let's start throwing as much cash as we can now so that we can have a nest egg before retirement too.
Would you say that moment where it goes from rolling over the IRA, which they can't touch anyways, that's the commit? And then when there's other conversations about how they can get more, is that another phase? Is that commit to extension phase? Or
we call it the all-in phase, maybe? The all-in. Hey, yeah. I've had conversations with investors where they're like, well, we've got this in the IRA account. We could probably scrape together a few thousand in cash. And I'm like, okay, well, I don't want you to pull $2,500 for an investment on, but that's how you can tell that they're just as committed as I am. And it's like, all right, well, save that cash and then we'll get you cash on the next one. But that's how they're thinking at this point. It's like, hey, I've got a few extra cents. I could probably throw that way. And I'm like, good, you're thinking the way I think. But wisdom dictates that we probably don't do that this time. But that's the mindset that kind of hits eventually.
Right. Well, I did want to extend a little bit. This is circling back just a bit, but on that light bulb moment or that moment where there's the shift from proof of concept to commit, it's definitely, I got this amount of money back. It's not taxable. I'm still going to get paid distributions, still have the same amount of equity. There's still returns to come if ever the investment runs its cycle and closes out. So you have all that like, oh, I'm going to keep making money. I have this money. I can reinvest this money. And not only do you reinvest this and then stack checks, as they say, put another check on top from that property, it also will help you defray the income you're already getting. Mm-hmm. So non-taxable event becomes tax advantage event in the rollover. Yeah. I mean, if it's cash, because obviously if it's going back into an IRA, that's going to keep going.
It's a different thing, which is already tax advantage. True. And having spent an hour in my CPA's office just this morning as we record this, yes, reinvesting pays huge dividends in terms of canceling out the gains. We at the company have sold properties over the last 2 years, and that's where significant capital gains are locked in, right? So we've liquidated and we've passed on lucrative returns to everybody, but then there is the tax bill associated with that. However, if you reinvest those funds, we can delay or defer is the best way to put it, probably, because eventually if we quit investing, there would be a big tax bill to pay in that year. If we sold everything, big tax bill, because we've deferred a bunch of taxes, we've pushed them all towards the back end, we've accelerated depreciation, taken the losses up front, we'd have depreciation recapture. There's a bunch of other things that is complicated tax stuff. But basically the idea is that as long as you keep reinvesting, you get all those benefits and all those tax advantages and all that cash with a minimal tax burden, because the next investment is offsetting the gains from the first investment. And it's almost a perpetual cycle where you can defer taxes as far down the road as you, and once again, you're the limit on how far you want to take it. And that cash flow that just keeps coming and builds and stacking checks, like you called it. Again, you're the only limit.
And I think the larger point I was going for, to bring it back kind of to the thematic of the life cycle, is you were talking about that moment of conversion, if you will. Mm-hmm. I think it's also a moment where everything is seen clearly. So I guess my point of bringing up like the kind of the last layer of benefit from the refi, for instance, is that it all starts appearing before the investor. Sure, you've told them about it, right? Just like you did right now. right? You know, like
Yeah.
you just told people about it, right? This is how it happens. But when they're seeing it on their actual 1040 or whatever,
Yeah.
and the money's coming back, and then they're seeing it all happen in front of them. For some reason, I'm envisioning like numbers floating in front of people's
Like a beautiful mind. He's
like a beautiful mind. Absolutely, 100%. It clicks into more than just, okay, I give money, money comes back. I get that point. That does seem to work. But this has emanating effects in multiple ways, some of which, even though you can be told about them generally, the subtleties of it or how it interacts with your particular situation, you're not going to know that until it happens.
True. And yeah, that's again, almost a circle all the way back to the beginning. That's why we try so hard. I've had conversations with people. I'm like, look, we're full on a particular investment, but we could give you a little bit of space, because what I want to do is I want to prove to that person. I want to have that road to Damascus. I saw the light. Your dad's going to appreciate that one.
Yeah.
Moment, so that the next time they go, okay, and it takes some time to get to that moment. There may be plenty of opportunities. I was having a conversation with an investor the other day, and we were discussing, some investments take longer than others to really show those fruits. And I was like, I completely understand it, man. I get it. But here's something that people don't always understand about me and my philosophy. Let's say they invested in one of the prior investments a couple of years ago. Not only am I into that investment significantly, which is, let's say it's going slower, but I'm in significantly to 3 more since then. That's how fully ingrained I am to this. Is like, it takes a while to get to the point where you're willing to commit that much across that many investments that quickly, knowing that most of them take a year or two before you really start to see, or even longer before you really start to see significant returns from it. And I'm like, I get it. That is very hard to explain to somebody, but I have already seen the light, as it were. I'm totally with you on the proof of concept to people who, have only been invested for a year or two or less. They haven't seen what I've seen yet. They're not to that point yet. So there's no problem. We'll get there. It'll take some time. We'll get there with them. And I'll be able to prove the concept with them. It's just, I can't have those conversations with them yet because they just haven't had the event, like you said, where it becomes clear to them that, hey, this is life impacting. Here we go.
Yeah. In your instance, and not just you, but generally speaking, if you're invested in multiple of them, all the timelines are going to be different.
Right.
And
well, I mean, the business plans are different too. I mean, some of them require
some more accelerated than others.
Yep.
So actually, it's funny. They haven't gotten to the point, if you're talking about this investor A who's at this moment, they haven't gotten to the point. They're just seeing, slow returns. But if they get on the other side of it and they commit, they would have a bunch of them that would be working at different speeds. And that's the whole goal, right? Is that, especially the reinvesting part that we talked about, you've got one that's showing, and then you've got one that's building that's not there yet, right? Because you've rolled it in. And sure, that one's slow, but you already got one that's past that point. And then it just keeps, and then you'll have two, and then you have, that kind of thing. So
it's a long game. Yeah. And that's just the thing, is that if you don't get to that point where you have a really high performing, the business plan is done, and it's, we're either working on a refinance or a sale or whatever, and it's shooting a bunch of cash flow off. Like, if you haven't got to that point yet, with any one of your investments, or multiple, if you've made multiple, the proof of concept isn't there yet. So regardless of how much you invested in the first time, if you haven't seen that click light bulb moment, then it's just going to take time until you see it.
Have people had that moment before the refi? Seems like.
Probably, I've had people just in conversation, where they go, I get it. This makes sense. They've followed for a long time. We have all kinds of conversations. There's a guy I used to work with that invests with us now pretty heavily. And we would sit at an exercise in the middle of nowhere in Georgia or Washington State or Kansas or somewhere. And we'd be sitting there watching airplanes fly, sitting in our operations center. And we'd just be talking real estate for hours while the training missions are going on. So just understanding the concept is hard to do without seeing it, but it can be done without living experience in it. So by, I don't know, a few months after the first investment, or even just he religiously reads the newsletters and all that stuff, he was basically like, look, dude, this is great. I love what's going on. And our philosophy at the company really resonates with him. And he's like, this is what I want to do. He's been investing probably 2 years total. But everything we've come out with, he's made an effort to try to put everything he could in. And he's going to be one of the ones, as his last 2 years, we've really started buying a lot more after all the interest rate stuff. Now we're starting to really see the opportunities again. So we're getting after it. And 2 years from now, I'm going to be cutting multiple big checks back to him that he's going to be able to reinvest pretty significantly. And he's well on his way.
I think we're at that point to wrap it up, but this is just an observation that kind of bemuses me, if you will, is that when you have these conversations, or people have done the early investment, but they're still in the proof of concept phase, right? Mm-hmm. And they haven't seen the big return yet. Do you ever ask them like what they're comparing it to?
No, and that's really hard because I was just thinking about that as you were warming up to this.
The whole point is they're new to investing, so it's like, well, what are you comparing the slow return to?
What did you expect? Yeah, exactly. Like,
what were you investing in that was way faster?
The answer is nothing. It's like they got something in their head, and it's human nature. You get excited about something. It's hard to say, all right, I'm really excited. Here's $30,000. And then you sit for a year and you're like, well, it seems like they're doing stuff. They started these very small distributions, I don't know, about 6-8 months in. Well, shouldn't I be seeing a stock just shooting to the, you know what I mean? That's how people view it. And it's like, well, it may be, but it's not going to be realized. The value of this property may have doubled in this time, but that does not mean that I'm going to be able to pay out huge amounts of money or immediately refinance. There's a whole bunch of other factors that turn this into a long-term investment.
Yeah. We've recently found out there's even more factors than we thought.
Yeah, there's always more factors than we thought. But yeah, I don't want to argue with people. But they're like, it's just like, hey, I'm going to have to ask you to be patient until I can prove to you why this was such a good idea in the first place. But yeah, you would say like, okay, so if you had thrown that into the stock market, what would you be doing right now? Even if it had gone up 10, 15% over the course of this year or whatever, like a really good stock, what would you do right now? Would you cash out, sell, and be done? Because then what? So it's hard, but it's human nature. You got these expectations. You get excited. You genuinely get excited. Yeah. You see that the long-term benefits are going to be there, but you're like, I hate waiting. All
right. Well, if you want to do a call to action or bring it home, come back to what I've said before. Don't worry if you don't have a lot of money to do this, or you have a decent amount, but you're not
sold on the idea yet.
No problem.
Yep.
No problem. That's why we love the low minimums. Invest what you're comfortable with for the proof of concept phase, and we'll go from there.
Let's get that clock started. Yeah, absolutely.
Yeah. All right. Well, speaking of clocks, we're going to wrap this one up. They're playing us off the stage, I do believe. So as always, we appreciate you guys hanging out with us. If you have any comments, questions, queries, thoughts, etc., please reach out in all the ways that you can via the platforms we're on or through our website or email. We appreciate you listening, and we hope you come back to do so again next week on another edition of the Get Invested podcast.